This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 26th, 2016. And in this month, there are 29 days. Keep that in mind. Don't forget, our radio show runs on 6:30 CHED, Sunday afternoon at 3. Now, next week, our show on March the 6th is going to be on at 2:30 to 3:30, prior to the Oilers Face-Off show. The Oilers are playing the Winnipeg Jets at 5. They'll have the Face-Off show from 3:30 up until game time at 5. Good luck to our Oilers as they play the Jets next week. If you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. If you would like to speak personally and privately with Harold about diamonds, call 1-800-432-1022. That's 1-800-432-1022. And Harold's website is rarecoloreddiamonds.com, our featured diamond of the week. This week's diamond is a stunning 2.63 carat, round, brilliant cut, fancy yellow, internally flawless ring. This is just a masterpiece. You can see it at rarecoloreddiamonds.com, featured diamond of the week. Click on the link, you will see it there. Harold, another interesting week in the financial markets, and we should note a lot of big losses in the banking industry out of Europe. European banks coming out with financials losing billions and billions of dollars. And that has been one of the concerns, that people are concerned that these insolvent banks could cause a problem for the entire financial landscape, and the concern mainly coming out of Europe.
No doubt about it, Randy. Things are really terrible there. The banking system is in shambles. Again, negative interest rates just don't seem to be working out there. In actual fact, I think there's an article in the newsletter this week, which is phenomenal, by the way. You did a great job. But in Europe, if you have $1 million sitting in a Swiss or Finnish bank, you'll actually lose $10,000 a year by keeping your money in the bank. So what incentive would anybody have, aside from paying your bills, what incentive would anybody have keeping the money in the bank? And that's exactly what the governments and the banks want, because they are going to charge you a negative interest rate, so it will force you to spend your money. But the fact is, that isn't happening because people are so concerned about the overall economy that they're just not spending. That's why the world financial markets are in disarray at this point. So the markets are all over the place again this week. You know, we had strong rallies in gold and silver, and oil's rallying a bit this week. The Canadian dollar rallied this week. But again, I believe that these are mostly just profit-taking type of situations or speculation in the market. As we're taping the show today on Friday, the 26th, you've got the gold market down $12 at $12.22. The fact is that the gold market has rallied quite strong over the past month. The low that we saw in gold was at 1,050 about a month ago, and now the market's sitting, it was as high as 1,250, so we saw a very fast $200 move in gold. That just goes to show you how gold can move quickly when the situation is right. And there are so many people out there that are looking for the gold market to rally that when the markets get down to these lower levels, you get the speculators coming in and buying up the marketplace. But gold, even though it has rallied a couple $100, I think it's building a strong base. And where I was concerned that when the U.S. dollar gets to 108 to 110, the gold could drop to 850, I don't think that that's a realistic price at this particular point. The number that we've talked about for a long time is $1,000 gold. We got to 1,050, and then the market rallied from there. I still believe that we're going to see $1,000 gold. I just see that the U.S. dollar is going to remain so strong. And on a day like today, the U.S. dollar is up 49.50 points, so it's at 97.89, pretty close to 98 cents. We've already broken the par level in the U.S. dollar. So again, the next major level for the U.S. dollar is at around 101 to 101.5. Once it breaks there, 102.5 to 103. But ultimately, I do believe that the U.S. economy is the best economy in the world at this point, even though it's got its issues, which is why the U.S. dollar is still going to rally to 108 to 110. That's going to push gold down to around $1,000, and again, we'll reanalyze the markets at that point. But again, now is not, in my opinion, the time for gold to take off and run. And some things that most people don't know about gold, the fact is that gold is traded on the COMEX exchange in New York, in the futures market. And basically, to trade futures, you need to put up margin or a goodwill deposit in order to get the leverage that gold will offer you. Well, what happened this week twice is that we saw the margin for gold increase quite substantially. So the fact is that as gold starts to trade and gold starts to get more active, you find that the exchanges that it trades on, they can restrict the movements in gold. And by raising the margin requirements, it means that you have to put up more money to trade gold and silver. And by that happening, it actually eliminates a lot of the speculators in the market. And that's exactly what happened back in 2011, which caused the gold market to drop from $1,900 all the way down to $1,100. They raised the margin requirements 5 times in 1 week. They made it so expensive to trade gold that all the speculators got out of their positions. So basically, it's ironic that we're seeing a similar situation at this point. Now, most people are not even aware that this is going on, but that's why this show is so important, because we bring information to you that most people just don't know. And again, where a lot of the analysts at this point believe that gold is going to take off and run, I don't believe that that's going to happen. And one of the major reasons that that's not going to happen is because they raise margin requirements every time gold starts to take off and run. That's the exchange's way of restricting gold's movements. And basically, gold is a very heavily leveraged market. So right now, you have to put up about $4,500 to control 100 ounces of gold. Now, 100 ounces of gold at this point is worth about $120,000. So every contract is 100 ounces. Gold is trading right now at around $1,220. So you're looking at about $120,000 worth of gold that you are actually able to control and trade for right around $4,500 to $5,000. So that is a very heavy leverage. That's why when gold goes in the right direction, somebody in the futures market can make a fortune in the market if they catch the move right. However, if you catch the move wrong and the market goes against you, your losses are unlimited. You could lose way more money than you put into the market. So when gold starts to get active like it is and has been over the last few weeks, now you've got the exchanges coming in and raising the margin requirements in order to stop gold from running. The other thing is that the U.S. dollar is going to run. So as the U.S. dollar gets stronger, and again, they restrict the movements in gold, look for gold to fall back. So in my opinion, gold would have to rally to 1380 in order for me to be bullish on gold. And I just don't see basically a $160 move coming at this particular point, especially after the exchanges just raised the margin requirements. So as far as I can see, if you were an aggressive trader, I would be shorting gold at this particular point, going long the U.S. dollar, shorting the Canadian dollar, and oil has moved higher. Now, don't forget, we saw $25 oil a couple of weeks ago, and now we're trading at about $33 oil. Nothing positive has happened in the gold market, in the oil market. The only thing that's happening at this point is the speculators came in, did some bargain hunting, bought up the price of oil, but I would be shorting oil at this particular point because there's not only a gigantic glut in oil at this point, which is why oil prices dropped all the way down to 25, but the other major thing is that Saudi Arabia is not going to cut production. So if they're not going to cut production at a time when there's a huge glut of oil in the market, there's just no way in the world that oil is going higher. So we're looking again as an aggressive trade on the short side is to short oil, to short gold, to short the Canadian dollar, and to go long the American dollar. Those are the markets that I see happening at this particular point. The crazy thing is that we traded gold all the way from $250 all the way up to $1,900, one of the greatest bull markets of all time. And we were one of the first analysts to ever predict back, in 2000 that gold was going to do this. Gold was not on the radar. Nobody was even talking about gold. The only people that really thought gold had a chance to move at that particular point was John Embry and myself. And the fact is that, people laughed when we made these type of recommendations. I remember being, when my show was on CHED, which obviously has been on now for over 16 years, the fact is that when we first started recommending gold, it was not a popular call, and a lot of the other analysts and shows on CHED and other channel stations that we were on thought that we didn't have a clue what we were talking about. But then gold went from 250 to 300 to 400 to 500 to 800 to 1,000. Broke through 850, which was the major number back in 1980, and nobody thought that gold was going to break that number. It went all the way to $1,920, and then something happened. The market didn't turn bearish. Nothing happened fundamentally or technically in the market. What happened is that the exchanges didn't want gold to run any further. So they started raising margin requirements just like they're doing right now, and it dropped gold. It made it so expensive to trade that gold fell from $1,920 all the way down to $1,100. And that's all orchestrated by the exchanges in New York where gold is traded. What a horrible, horrific thing to happen, that they can control and manipulate a market like that just because they don't like the direction that market is going to. Because gold is a barometer. When things start getting bad and iffy in the economy, gold will rally just like it did from 1,050 to 1,250 over the past month. But now gold's starting to head back down, and a lot of that has to do with the fact that the margin requirements are being raised on the COMEX exchange in New York, and that's the way that they're thwarting the movements in gold. So, again, at this particular point, I'd love for gold to run. Believe me, I own a lot of gold myself. I do not sell my gold, nor do I trade it. The fact is that you never ever know when the price of gold is going to skyrocket. It could happen at any time. But the fact is that in all the years that I've traded the market, over 35 years, again, there are certain things that I look at, and at this particular point, I don't see that this rally has legs, and I'm not buying into it at this particular point. So, Randy, at this time, I see gold falling back down to around 1,000. Silver, I see coming down to around 1150. It's at $14.95 today. I see the oil market going back down into the mid to lower 20s because I know that there's oil being sold in the Middle East for $22. We hit 25, so we came very close to our predictions. Our predictions were for gold to hit $1,000. We hit $1,050. It was for oil to go to $22. We hit 25. For the Canadian dollar to go to 60 cents, we hit 68 cents, but still I believe that the Canadian dollar is going to drop with oil. And again, I do believe that oil will come down to around $22. So at this particular point, that's what I see in the markets, Randy. And again, over the mid to longer term, I also see gold going up into the $3,000, $4,000, $5,000 range. When the banks really start to get into trouble and inflation starts to kick in, which it's going to, again, the price of food is increasing. The way that the government looks at inflation and gauges inflation is totally different than the way that us, the consumer, views inflation. So, again, at this particular point, again, we're going to see the markets continue to trade in a volatile fashion, and we will certainly let you know when we believe it's time to buy gold and silver again. But every indication I have is that this market is going to retreat. And for those aggressive traders out there that follow our recommendations, I would be short gold, oil, the Canadian dollar, and I would be long the U.S. dollar all the way up to 108 and 110. And that's how I see the markets today.
Harold mentioned food prices. Tomato prices went nuts in January. The price of tomatoes saw a huge 15.3% increase month over month in January. 15%. I believe it was cauliflower here in Canada that just skyrocketed in price, up around 10%, if I remember correctly. Connect with Harold. Speak with him personally, privately, about investing in hard assets, diamonds, gold, silver, the different programs that he has where you can profit and protect the money that you have today rarecoloreddiamonds.com. Rarecoloreddiamonds.com. 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week is a stunning 2.63 carat round, brilliant cut, fancy yellow, internally flawless ring. See it at rarecoloreddiamonds.com. Featured diamond of the week. Harold touched on it. This is in our free weekly newsletter. If you'd like to get our free weekly newsletter, we send it out via email free of charge every week. You can get it, go through it in 5 minutes if you want, or if even quicker, and you'll be up to date, or spend hours. Speak with Harold, rarecoloreddiamonds.com, 1-800-432-1022 to receive our free weekly newsletter. In the newsletter, Mark Faber, publisher of the Gloom, Boom, and Doom Report, said, leave $1 million with a bank, and in a year, you'll only get something like $990,000 back. I would rather own something solid. In other words, hard assets. And he's talking about negative interest rates. One of the other stories that was quite telling during the week, and this is what happens when you go to negative interest rates, which is happening all around the world. And we have a chart in our newsletter that shows where negative interest rates are very prevalent. Safes are selling out in Japan as negative interest rates are triggering cash hoarding. Look no further than Japan's hardware stores for a worrying new sign that consumers are hoarding cash, the opposite of what the Bank of Japan had hoped for when it recently introduced negative interest rates. This is in the Wall Street Journal. Signs are emerging of higher demand for safes, a place where the interest rate on cash is always zero, no matter what the central bank does. In response to negative interest rates, there are elderly people who are thinking of keeping their money under a mattress. One saleswoman at a store in eastern Tokyo told the Wall Street Journal, which also says at least one model costing $700 is sold out and won't be available again for a month. That's the demand in the safe market. According to the Bank of Japan theory, they would have moved their funds into riskier but higher earning assets. Instead, they're moving into pure cash that earned nothing. That according to Richard Katz, author of the Oriental Economist newsletter, and he was quoted in this article. You can read the story in our free weekly newsletter, but safes are selling out in Japan. And that does not surprise me in the slightest, based on what's happening in the world today with negative interest rates. And Harold, action, reaction. And those are the things that do not surprise me. In fact, Mark Faber also said there are now more than $8 trillion worth of government bonds with negative interest rates. Negative interest rates is a very interesting legal case because it mostly constitutes, it is written that it's an expiration of not an option, but negative interest rates are essentially basically they're taking savers' money. They are taking savers' money. And Harold, that's something people have to keep in mind even here in North America. We may not have technically negative interest rates, but when we have interest rates as low as they are right now, you factor in inflation, true inflation, you're in a negative interest rate environment. You need to put yourself in a better position, go into assets that are not going to be negative for you when it comes to returns on your hard-earned dollars.
You're 100% right. We are basically in negative interest rates because obviously you're not even getting 1% by keeping your money in the bank, and then when you factor in paying your taxes on that money and inflation, you're losing your money keeping your money in the bank. So most people are going to realize at this particular point or wake up and realize that you only reason to keep money in a bank is to pay your bills. Outside of that, banks are not safe in any way, shape, or form. After 2008, we all know what happened with the banking system and with the mortgage system and everything, and it has never, ever recovered. All you have to do is look at the stock prices of the major banks in the United States, and you're going to see that, Citibank, which was an $80 stock at one time, is now a $20 stock. They never recovered. Bank of America is trading at about $13. So the fact is that the banks held so much debt and have so much debt on the books that they can never get over that. All they're doing is basically kicking the can down the road type of thing, because eventually they're going to have to pay the piper. So you have to keep money in the bank in order to operate your business and operate your household, but you should be looking at other areas to put safe money. And the fact is that there's not a lot of ways to make money at this particular point. You know, my Canadian clients and I have done extremely well together over the past 30 years. In fact, my Canadian clients have been instrumental in many cases of my business growing to the extent that it has. So when opportunities come around for private investments in my own business, I tend to let my Canadian clients work with me on this. And we have investments at this point that our clients are making 25% a year or more. And if you're not doing well, please give me a call, because, again, we do have very conservative programs that are paying our Canadian clients extremely well. And, again, where these not the mainstream, they're not stock-related or paper-related, they're actually in my own business. But my clients have been my lifeblood for the last 35 years, and this is my way of paying back. So, again, if you're sitting in the bank and making 1% on your money, if you're sitting in the stock market and losing every single day, your retirement savings plans are losing money every single year, give me a call. Again, listen to what we have to say, and if it's comfortable for you, I can show you ways you could do way better than the mainstream in investments that I go into myself. So, again, these are investments are for Canadian clients only. They're doing extremely well, and if you want to hear about them, give us a call, and I'll spend all the time in the world that you need so you understand exactly what we're doing to make our clients money.
1-800-432-1022. The call is free. You'll speak personally and privately with Harold, confidential, anything said between you and Harold. RareColoredDiamonds.com, 1-800-432-1022. Our featured diamond of the week is a 2.63 carat round, brilliant cut, fancy yellow, internally flawless ring. See it at RareColoredDiamonds.com, featured diamond of the week. In the United States, just before we get to our break, 1 in 4 Americans on the verge of financial ruin. According to a survey released Tuesday by Bankrate.com, more than 1,000 adults, nearly 1 in 4 Americans have credit card debt that exceeds their emergency fund or savings. And that's particularly because people, in addition to their debts, don't have a dime in their emergency fund at all. Another Bankrate survey released earlier this year found that 29% of Americans have no emergency savings at all. 1 in 4 Americans on the verge of financial ruin if they were obviously going paycheck to paycheck, if there was a difficulty in their life. Very concerning. Don't forget, our next show coming up on March the 6th, and we'll be on at 2:30 instead of 2:30. Due to the Oilers playing the Winnipeg Jets, we'll be on 2:30 to 3:30, and then the Oilers face-off show. Keep that in mind for the next show. We're going to come back and talk about investing in diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 26th, 2016. Our time is 9:06 Mountain, 9:06 in the morning. Our radio show runs 6:30 CHED, Sunday afternoon at 3. Next week, we are going to be on at 2:30 to 3:30. The Oilers are playing at 5 against the Winnipeg Jets, so we are on prior to the Oilers face-off show, 2:30 to 3:30. If you ever miss a show, don't forget the shows are archived on Harold's 2 websites, HESradio.com, RareColoredDiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. RareColoredDiamonds.com. RareColoredDiamonds.com. That's Harold's website. 1-800-432-1022. You can speak personally and privately with Harold about investing in these economic times, geopolitical times that we live in. The call is free. The conversation is confidential. And talk to Harold about how you can profit and protect the money that you have today for retirement. Our featured diamond of the week is from RareColoredDiamonds.com. a stunning 2.63 carat, round, brilliant cut, fancy yellow, internally flawless ring. See it online at rarecolorediamonds.com, featured Diamond of the Week. Lawrence Graff is one of the biggest diamond dealers in the entire world. And he was interviewed, and a quote from that interview I thought was interesting. It's in our free weekly newsletter. He was asked, well, what is your favorite color of diamond? And he said, it's impossible to choose a favorite diamond. They're all fabulous and special in their own unique way. Colored diamonds have to be cut and polished in a very different way to white diamonds. The extraordinarily challenging task of transforming a colored rough into a masterpiece is entrusted to a very select group of master cutters who apply their highly guarded secrets learned over many years with their natural instincts for color. They are true artists. And that's what we've said, Harold. You take a colored diamond, which is the rarest of the rare to begin with when it's found, nature's art, in mines and depleting mines, as we know, from the Argyle mine that's going to shut down in 2020. Then on top of it, you have to take that diamond and somebody has to cut it. And as Lawrence Graff was saying, it's a very different scenario than cutting white diamonds. And these master cutters are the best of the best. And when they finally get through and cut that diamond, you've taken nature's art and turned it into a masterpiece similar to a Picasso or a Van Gogh. This is why we like this market. It's the rarest of the rare in so many different ways.
You bet, Randy, and well spoken. You know, this featured diamond is so special in so many ways. Just looking at the 4 C's. First of all, the cut of the diamond. The cut is the style in which it's cut. This is a round diamond. Now, in white diamonds, round diamonds are probably the most common and popular. In colored diamonds, they're the rarest and actually command a premium to them. So this diamond is round in cut, and that's extremely, extremely rare, where radian cuts and cushion cuts make up probably 80 to 85% of the way the diamonds are cut. When you start getting into the very rare cuts like the heart shapes, the pear shapes, the marquise, the emerald cuts, and now the rounds, again, you're talking about diamonds that are much more difficult to cut. A cutter will only cut a round diamond if it's going to be a tremendous diamond, if it's going to be an extremely rare find, like this 263 is. So, number one, it's a round cut, which makes this diamond extremely rare. Number two, the carat weight. The fact is that only one diamond in 15 million is over 2 carats, and I can guarantee you they're not a diamond like this one. This is a 2.63. It's a big, beautiful, round, gorgeous diamond, and again, very few diamonds ever reach this size. Then you've got the color, which is a fancy yellow. Now, fancy yellow is also known as a canary diamond, and the color on this diamond is a 10 out of 10. It will take your breath away. It's that beautiful. So what you're looking at is a magnificent 2.63 round, fancy yellow, internally flawless diamond. So this diamond is one of the best that you could possibly get. It's got everything going for it. It's round, it's flawless, it's big, and the color is magnificent. A diamond like this would not only look magnificent on the finger, but on top of that, it's a phenomenal investment that over time can increase 10 times what it is today. Again, diamonds are not a short-term investment. Diamonds are a long-term investment. In fact, most people that invest in diamonds will hold on to them for 10, 20, 30 years. Some that don't need the money will just turn them over to their kids and grandkids, as I've done, and put away for my grandchildren, because they're one of the best investments you could make. A stock can go to zero, a diamond never could. In fact, a diamond like this will never, ever decline in value. It can only go up because there's no other diamond that I know that matches this particular diamond. So again, these diamonds are one of a kind. When you look at investing, especially in today's marketplace, as volatile as the markets are, the first thing you look at is the risk. And there's a risk when you go into a trade that I could lose all of my money. Well, that could happen definitely in the stock market. It's happened many times. We saw General Motors go to zero before they, restructure type of thing. So a stock can go to zero. Gold and diamonds can't. In fact, when you're making an investment, the first thing you look at is the risk and the safety factor. And you have to realize whether or not you can take that risk. In a diamond, you don't have that risk because the diamond will never go below what you paid for it. Unless you're desperate to sell and you need to get out of it and you're willing to take whatever, but in the marketplace, at auction or a private sale, a diamond like this will never decline in value. It will only increase in value. So when we look at investing, we look at, first of all, capital preservation. Is my investment going to hold water? Is it going to hold its value? And in the case of this diamond, yes, it definitely will. The other situation is, can I make money with this asset? And in this diamond, yes, you definitely will. The longer you hold it, the more it'll go up in value. And this particular diamond is put into a magnificent platinum ring, and it's got beautiful white decolored diamonds on each side. So you're talking about a diamond ring that would take your breath away, but on top of that is one of the best investments you could make. I absolutely love this diamond, and that diamond sells in and around the 150,000 range. So again, it's not for everybody. But the fact is that this is an outstanding investment that will continue to go up over time and never, ever lose its value.
Harold has always educated us about diamonds, real estate in your pocket, portable wealth. And obviously, we believe in following all laws, not breaking any laws, being 100% honest and ethical. And I say that prior to reading this to you. Mark Faber said, well, basically, I think the issue really is if they introduce a cashless society, I think it's going to be very likely that the government will try and take gold away from you. Now, in 1933, this happened, and then the government collected the gold, and they paid you $20 an ounce. After they collected all the gold, they revalued it to $35 an ounce. Nowadays, I'm not sure whether that would fly, but one thing is very clear. In the 30s, it was easier to, obviously, hide gold. You could buy it and essentially put it in a hole in your car or safety deposit box at home and so forth. Nowadays, with metal detectors and all kinds of devices, it would be difficult to hide gold. Equally, if you walk through an airport, probably it's easier to have stamps, and he mentions diamonds, than gold, other than gold. He actually believes that if you're going to have gold, it may be a consideration that it be stored in Asia. But Harold, an interesting note, Mark Faber saying that if you wanted to get out of Dodge, if we were in a scenario where you needed to resettle somewhere else, diamonds, heck, even stamps would be better than gold, and we agree with him.
Well, there's no doubt that diamonds have always been portable private wealth, easily to transport because of the size of them. It's very difficult to detect. It doesn't go off when you go through an airport type of thing. But again, you're talking about an expensive asset. You're talking about something that we don't recommend in any way, which is trying to smuggle something through the airports and into a different country. If you own your diamond and you've got your paperwork on it, you could take that diamond anywhere with you. You could take a $10 million diamond ring and go to Europe, and you could end up living there. As long as you have the paperwork that you own that diamond, you're not going to have an issue. If you ever did come back to Canada and the United States, you either have to still have that diamond with you, or if you sold it, they're going to want their taxes on it. But again, portable private wealth, people that are actually taking diamonds, leaving the United States or Europe and going to a different part of the world, diamonds are portable private wealth that are easy to transport. So the fact is that if you were going to start all over and go to a different location, diamonds are probably the easiest way to store and move wealth, because you cannot cross a border with more than $5,000 in cash. You cannot cross a border taking your stock certificates with you. You cannot cross a border with gold. But you can cross a border with diamonds as long as you own it. So that's exactly what I've been referring to all this time, is that if you ever did need to get out of Dodge, as Mark Faber was saying, diamonds are probably the best route to go. And we are never talking about smuggling or doing anything illegal. All we're saying is that you own the asset, you paid for it, you could take it anywhere you want.
Our featured diamond of the week from rarecoloreddiamonds.com is a stunning 2.63 carat round, brilliant cut, fancy yellow internally flawless ring. See it at rarecoloreddiamonds.com, featured diamond of the week. And speaking of yellow diamonds, they have done very, very well in the first 3 months of the year. Fancy colored diamond prices rise on shortages and strong holiday sales. Now, fancy colored diamond prices increased about 0.3% on average during the fourth quarter of 2015 due to very strong holiday sales. And this is according to the Fancy Colored Diamond Index. Now, they go on to mention that, and this is very important when you talk about yellow diamonds, as we have our featured diamond, a yellow diamond, lower supply from diamond producers has led to a shortage of fancy yellow diamonds. Mining companies have effectively shut down a considerable portion of their rough diamond production, especially in Africa, around mid-2015, resulting in market shortages across color and size categories, as reflected in index results. That according to Jim Pounds, who's a board member of the Fancy Color Research Foundation, which has the index. Now, prices for the fancy yellow segment performed the strongest, increasing 1.1%. And the FCRF said in a statement here this month, within the yellow category, 3-carat diamonds demonstrated a 2.7% increase. 5-carat stones rose 4.4%, likely driven by low availability in rough tenders. And that goes to show that, yes, right now, yellow diamonds, very, very rare. White diamonds have increased a little bit. Now, they go on to add, out of non-yellow colored diamonds, the prices of 1 carat and 1.50 carat fancy vivid blues and pinks increased the most, advancing 4.4% and 3.7% respectively. And they add, the market is showing clear preference towards fancy intense and fancy vivid at the expense of the lighter color fancy category. But Harold, right now, according to this report that we have, and this is the Fancy Colored Diamond Index, and it's from the FCRF, we're seeing, that's the Fancy Color Research Foundation, we're finding that according to their index, yellow diamonds right now are very, very rare.
They certainly are, and the ones that we offer are all flawless, and that's extremely important because if you're looking at yellow diamonds that are flawed, the VS1s, the VS2s, the SI1s, the SI2s, they're a dime a dozen. You can see them all over the internet at very inexpensive prices. When you're buying something like a diamond, you want to buy the best that you can possibly get. Now, again, if somebody's going to come into the marketplace and look to buy invest $5,000 or $6,000, you're not going to be able to buy something that is going to be able to make you money over the longer term. You'd be better off saving your money. Our diamonds started in and around the $20,000 range, but these are flawless yellow diamonds of very high saturation. And these are investment quality diamonds that have a track record. They go up by around 15% a year, except for the vivids that have the highest saturation of color, and now those can actually go up 20 to 25% a year. In actual fact, to get a vivid yellow flawless diamond today is much more difficult because there are so few and far between. So, again, you definitely want to be able to get the best that you can possibly afford to buy. In fact, when you look at what's happening at auction, and a lot of times, the sizzle is the 10, 20, 30 million dollars that are selling. Obviously, it's sensational that a diamond can sell for that amount of money. However, if you really look at the auctions, the diamonds that are selling for the biggest percentage profit are the mid-price diamonds, the diamonds that are 20, 50, 100, 200,000. You know, the ones that sell for, you know, in the multi-millions obviously have done tremendously well, but the fact is that dollar per dollar is more the medium-priced diamonds that are doing much better percentage-wise. We've seen countless situations where Christie's or Sotheby's has estimated a diamond to sell, you know, for 100,000, and it sold for 300,000. You know, 300% different or 200% different than what the experts actually thought it would sell for. And it's not that they don't know their business, they do. It's just the sign of the times. People understand the value of an alternative hard asset like a diamond, and they're getting more and more educated. You know, we're the only company that really has the secondary market to resell. We're changing our auction business, because 3 years ago, we found that 80% of our clients that would attend our auctions would attend on their home computer. Now, through surveys, we have found that 80% of our clients will attend it on their personal iPhones. So our new technology will be done by sometime around the middle of March, and then we will start to resume some amazing auctions. And we've got auctions coming up that are not only dollar-related, diamond-related, they're going to be extremely amazing classic cars and phenomenal vintage watches and crazy boats and planes and things along that line. So we're going to have a lot of fun this year with our new auction site as we start to change the technology. Again, everybody's waiting for that. That's going to be an awful lot of fun. The fact is that the diamond market is getting more and more rare. And are the best investments that you could make at this particular time. You know, we've talked about the people in Europe and how they're suffering at this point, and we know what happened with the people of Greece last year when the banks closed for weeks and nobody could get their money out of the bank. But if you owned a diamond, doesn't matter what kind of diamond, you could have gone across the border, you could have gone to Germany or Switzerland or whatever and sold that diamond and come back with some cash that would have got you back into the game, got you back into business, paid some bills, put some food on the table. That's what's so important about owning an alternative asset like a rare diamond. The fact is that the rarer that diamond is, the more it's going to go up in value. And with the markets the way they are today, with the gold market and the oil markets and the currencies and the stock markets and the bonds and everything going on and being manipulated and all the bad press that Wall Street is getting and the banks with negative interest rates, there's very few investments that could give you the peace of mind that you need in order to own an asset like a rare colored diamond. Again, you don't buy a diamond and look to sell it in a couple of years. You're defeating the purpose of owning that diamond. All of us that own Argyle pink diamonds, it would be crazy of us to sell those diamonds before the Argyle mine closes. It's only 4 years till the mine closes. We've been waiting 10 years for this to happen now. It's right around the corner, and that's where our big payday is going to come out. When the Argyle mine closes before 2020, we give it a couple of years for all the diamonds to run out, and the returns on the pink diamonds, I think, are going to be equivalent to what we're seeing in blue diamonds. We're also starting to mine very rare green and orange diamonds. In actual fact, we believe that green and orange diamonds are the next blues and pinks. And there are tremendous opportunities in these markets. When I mentioned earlier in the show that our mining business is booming and we allow our Canadian clients to invest with us, that's where our clients are seeing 25% or more in the mining business by buying rough diamonds. And in a lot of cases, there's these very rare and beautiful green and orange diamonds, which most people don't even know exist. We've seen blue diamonds go from $200,000 a carat 10 years ago to a blue diamond that sold a few months ago for $4 million a carat. It was a 12-carat vivid blue called the Blue Moon, and it sold for $48 million. You do the math. It's $4 million a carat. 10 years ago, that diamond probably would have sold in the range of about two to 300,000 a carat. That's how much these diamonds will go up in value, especially with the marketplace the way it is right now. Again, give me a call, and I'll sit down and speak to you on the phone, and I'll go over your financial situations. I'll let you know what you should keep and what you should get rid of. And again, offer to you our private investments that are doing tremendously well at this point. Our Canadian clients that are in these investments are loving it, especially with the fact that the oil market has dropped the Alberta economy so severely, and so many of our great clients and friends are working less or unemployed. If it wasn't for these private investments that my company has offered, a lot of my clients would be in trouble. But fortunately, we've done extremely well during these trying times because I've always been one to go against the grain. I don't go with the general public. The general public is always wrong. They never buy the market at the right time. We do alternative assets. We don't trade in mainstream stocks and bonds and things like that. I'm not a fan of it. I haven't been in that market, since 1999 and have no plans of going back into it. A stock can go to zero, gold and diamonds can't, and that's what I love about the markets that we're recommending and investing in.
Speak with Harold personally, privately. Call is free. And when you speak with him, it's confidential. 1-800-432-1022, 1-800-432-1022. RareColoredDiamonds.com is the website. Our featured diamond is a stunning 2.63 carat round, brilliant cut, fancy yellow, internally flawless ring. See it at RareColoredDiamonds.com. And one of the reasons people are moving into hard assets like diamonds is the exact quote that we had off the top of the show from Mark Faber. With negative interest rates, and we talked about it earlier as well, $8 trillion worth of government bonds with negative interest rates around the world. People are putting their money in bonds or putting their money in bank accounts, getting negative interest rates. Put $1 million in, a year later you're getting back maybe $990,000. That's why the Japanese, because of negative interest rates, there's a run on, safes. And it's no surprise. One of the other major problems that's going to be a big concern in the years to come in the United States is the debt crisis that they will definitely have hit. 45% of Americans pay no federal income tax. 1 in 4 Americans, as we mentioned, on the verge of financial ruin due to the fact that they really have no savings. The United States is $19 trillion in debt. The budget that was recently passed in the United States by the Obama administration and the House and the Senate allows them to run that up to $21 trillion. And before you know it, I know different organizations, Congressional Budget Office, have said that within a short period of time, we're looking at, here we are, 2016, they're saying potentially by 2020, you could have a debt in the United States of $30 trillion. That's right, $30 trillion. That's why you need to, in a cashless society that they seem to be pushing, or negative interest rates, which seem to be very prevalent. And Harold brought up a very good point. If you're investing in a GIC here in Canada and you're getting 0.5%, 1%, inflation is above that, you're paying tax on it, you're in a negative position. That's why people are moving into hard assets and moving into them very quickly, the smart money. They don't want to lose the money that they have. It's the old saying we've talked about before. Number 1 rule in investing, don't lose money. Number 2, remember rule number 1. And Harold, with about 2 minutes left, it's so important now that we really have a laser focus on profit and protecting the money we earn, and obviously we work so hard for on a daily basis.
You bet. The thing is, let's not forget what happened with the banks back in 2008 and 9 when they raised the insurance. You can't keep $1 million in the bank today, without fear that the bank is going to close down and take your money or do bail-ins like they're doing in Europe. So the fact is that anybody who has any large amounts of cash sitting around, money sitting in the banks or that type of thing, it's not easy to keep money in the bank anymore because of that particular situation that a bank could close down. You can have $1 million sitting in the bank with $250,000 worth of insurance. The bank closes down, you're getting back $250,000 and you're losing $750,000. That's what it means to keep money in the banks today. So again, we're in a very, very difficult position. The markets are crazy. You cannot trust the stock markets or anything that's happening in the markets today. And the fact is we need to be very conservative, not speculate, and understand that capital preservation is probably more important than capital appreciation at this point. So, again, I want to talk to my Canadian clients and listeners to this show. I've been speaking to clients that have been listening to our show for 15, 16, 17 years now. That's a tribute to Randy and I, and again, I thank everybody out there that is so loyal to this show, and this is our way of repaying you. Give me a call, and I'll show you why my clients are making 25% a year or more when most people are not coming anywhere close to that.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold, rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.